Midcap sector is always a happening place. Many of the companies move in and out of the sector. Some of them move from mid-cap to large cap and some others move to the small cap. Hey guys, this is Shiva and welcome to Finpati.
Hey, hi, this is Aji from Finpati, and as promised in our introduction session, here we are with an interesting video on sectorial bets in the mid-cap space. So we don't want to make this too lengthy, so we have cut it into two parts. In the first video, we will cover the sectors Pharma, IT, Auto, Plastic Products, Packaging and Films, and Infra. Without wasting much of time, let's get straight into the video.
Now, let us talk about pharma sector. India has a growing presence in the global pharmaceutical industry. Especially the generic segment, it occupies over 20% of global production by volume and 14% by value. Our country has most number of pharmaceutical plants compliant by US FDA outside the United States. In pharma sector, we can talk about this company called Solara Active Pharma. Solara Active Pharma has two types of businesses. It is involved in commercial R&D and production and also contract research and manufacturing facilities. It's a pure API company. It undertakes the business of manufacturing, production, processing, formulating, selling, distributing, trading, and dealing in the active pharmaceutical ingredients. Let us talk about some key data points as on 5th of September about Solara Active Pharma. Market capitalization of this company stands at 6,096 crores. Current share price is at 1697 rupees per share. Stock PE is at 26.6 versus sector PE of 40.14. Book value of this company is at 442 rupees. This company provides a dividend yield of 0.41%. ROCE of this company is 15.5% and ROE is 17.2%. Face value is 10 rupees per share. If we look at 3 years CAGR growth of this company, then revenue stands at 46.5%. Net profit has a humongous growth around 737.4%. Operating profit stands at 83.5%. Let us look at the shareholding pattern in this company. Promoters, they hold around 41% of total shares. Followed by FIIs and DIIs, they have close to 22% in the total shareholding. Public, they have close to 36% of total shares. Now, let's discuss some of the pros of this company. As I've already mentioned initially, India is a progressing company in terms of pharma sector. Similarly, this company has also a lot of scope of growth in the pharma industry. This company has around 25 successful FDA audits. It has 150 plus DMF filings. Promoters, FII, DII holdings together, they are increasing marginally around 2% from 2018 to FY 2021. The face value of the stock is 10 rupees, so there is always a flexibility for a stock split. Gross profit margins have increased from 49.86% in 2008 to almost 56% in 2021. Operating margins have grown from 13.02% to 22.54%. Net profit margins have grown from 0.85% in 2018 to almost 12.5% in 2021. Promoter split shares came down from 51% to 8.86% in 2021. Now, let us also look at some of the cons that this company has. Promoter stakes have actually reduced by 3% in the latest quarter. Now, let's get into the technical analysis of Solara Active Pharma.
Hi, you're RG back again to discuss more about the technical and the data analysis part of Solar Active Pharma. Before we talk about Solar Active Pharma, let's talk a little about how Nifty Pharma is currently performing. So when you see the pre-pandemic levels, almost like if you consider 5-year period before pandemic levels from 2020. So from 2016 to 2020, if you see the charts, the blue one indicates the Nifty 50 levels, where the purple one indicates the Nifty Pharma index. So there is a consistent and a considerable downfall in the Nifty Pharma, where it has given a negative 31% movement in the Nifty Pharma section, where the trigger actually has given by the mammoth Sun Pharma fall, where you can see that the Nifty 50 has given a positive movement of almost like 51%. So when you see both of these, there is a difference of 80% movement between these two. So there is a serious underperformance which has gone for 5 big years. At the same time, if you see the post-pandemic levels, you can see a very kind of a better recovery that you have observed in Nifty Pharma levels, where it has given a positive movement of almost like 105% since the pandemic level. The pandemic has started, where the Nifty 50 has given a 93% positive movement. So kind of there is a better recovery or relatively better recovery on the Nifty Pharma when it compared to the Nifty 50 levels. So there is a lot of room that there is still left on the Nifty Pharma levels for it to move ahead, right? Now let's get more deep into the technical analysis part of the Solar Active Pharma. So there is the highest volumes that we have seen in from considering the calendar year 2020. There is the highest volumes are currently concentrated around 650 levels. I understand there is a lot of difference between 650 and the current levels, which is 1650, but still that's where the highest volumes are traded around. But the recent better volumes are actually traded around 1250 levels, and 1500 continues to be the one of very crucial levels that it has to have a support around. And there is a lot of bulk deals which are recorded between 1400 levels to 1560 levels. That's what the important levels that you have to watch around. And based on price action and volumetrics and based on the deliveries, you can see that there are multiple support levels that we have mentioned. You have to wait for better levels. You have to have the patience of waiting for better prices to have better returns, of course. So that you can actually you can consider that 1400, 1272 and 1030 as a wonderful support levels. You can see that the stock has actually moved up quite a bit when compared to the 52-week low and 52-week high, and there is even when you consider the moving averages, you can actually depict the same thing. The difference between 50 moving average and the 200 moving average is just 1/8 of the current market price, which is 200 rupees. So which is kind of still a better consolidation. 1/8 to 1/12. It's kind of a better consolidation levels going around. If it is something below 1/6, it means the stock has really ran a lot and it demands for a correction or a consolidation. You can wait for a better price is what it says, but 1/8 to 1/12 is definitely a better consolidation levels which have already happened. So you can still look at better prices. You definitely have to look at better prices and buy any stock in better trenches. So just don't go and put whole of the money. It's not a recommendation firstly. So and let's get in more into the details of how it has performed, how the mutual funds are invested into this Solar Active Pharma. You can see it here. So TIMF, it's kind of holding 10.8 lakhs of shares, and where IT Birla Sun Life, it's holding 9 lakh shares, which accounts to 2.5%. Magnum Midcap, SBI Magnum Midcap, it has almost like 7.5 lakhs of shares. And not just these, there are many other mutual fund companies which are invested in Solar Active Pharma, like, it could be One Offshore Master Fund and a Scottish Oriental Fund. There are many other stocks, many other mutual funds as well, which have invested into this stock. So you can see that there is a considerable increase in the institutional investors as well, and even the count that you can actually see from 62. The count has grown to almost like 98, which is again almost like half of 50% of increase in the number of players, which is definitely it's kind of, it's not concentrated at few players. It is kind of diluted. and that's a better sign for any stock.
Now, let us talk about IT segment. Please note that the mid-cap IT segment is already at its peak. It awaits a correction. However, if we have to talk about any of the IT companies in the mid-cap space, we can talk about this company called Persistent Systems. Persistent Systems, it provides software and engineering and strategy services to help companies implement and modernize their businesses. It has its own software and frameworks with pre-built integration and acceleration. It has a partnership with many of the providers such as Appian, AWS, Dassault Systems, DataStax, IBM, etc. Industries that this company support are banking and financials, healthcare and life sciences, industrial, software and high tech, telecom and media. Now let's talk about some key data points of this company. Market capitalization is 26,868 crores. Current share price is 3,514 rupees. Stock PE is at 52.5 versus sector PE of 41.3. Book value of this company stands at 366 rupees. Dividend yield is 0.57%. ROCE is 21.2% and ROE is at 16.1%. Face value is 10 rupees per share. If you look at 3-year CAGR growth, then revenue has grown by 10.9%. Net profit has grown by 11.7%. Operating profit has grown by 13.4%. Now let's look about the shareholding pattern in this company. Promoters hold around 31% of the total shares. Then FIIs and DIIs hold around 50%, and the remaining 17% is held by public. If we talk about some of the pros of this company is almost debt free and it has a healthy dividend payout of around 25%. The median sales growth is around 17.45% for the last 10 years. Promoters, FIIs, DII holdings together has increased marginally around 5% from 2018 to 21. The face value of this stock is rupees 10, so there is a flexibility for a stock split. Free cash flows per share have doubled to 85.83 in 21 since last year, and it has a very strong financials. Let us look at some of the cons of this company. A few of the key managerial personnel in this company have resigned recently. Stock is slightly on a pricier side. The PE is high. Some of the insiders, they have sold their stocks. Now, let us look at some technical and data analysis of Persistent Systems.
Aji back again to discuss about the technical details of Persistent Systems. But before we get into Persistent Systems, as usual, let's get into the sector technical analysis, so which is Nifty IT. So you can see from 2016 to 2020, which is till pre-pandemic levels. So you can actually see that Nifty IT had a kind of a hand-in-hand run with the Nifty 50 level. So this whenever you see these levels, of course, there is a wonderful movement in Nifty and TCS, which actually had triggered a beautiful movement in the Nifty IT space. So you can see that there is no much difference between the final results that you got from Nifty from 2016 to 2020. It's just a 56% a positive movement in Nifty 50, while Nifty IT had a positive movement of 51%, which is kind of a little 5% extra movement in the Nifty 50 levels. So, but when you see the after the pandemic has hit, then you can actually see how the Nifty IT has started behaving. This became one of the dream runs of the Nifty IT levels, where it has given almost like 181% of the move from its low of the pandemic low, where while Nifty 50 has given a 98% of move, where it's kind of almost like a double movement that we got in the Nifty IT levels when it compared to the Nifty 50 levels. So this movement has actually triggered because of be it TCS, be it Infosys, be it all big four. It's like HCL, Tech Mahindra. Everything actually has moved single-sidedly. Not just those, even though mid-cap, many of the mid-cap IT companies have kind of moved into large mid-cap area. It's kind of from the mid-cap mid to lower segment to the mid-cap large segments. So be it the wonderful example that I can talk about is the Mindtree. Had it been in the mid-cap segment, that would have been our pick definitely. But yeah, now it is kind of 50,000 crores of market cap. I can't consider it as a lower or a low mid-cap section. So this is what our Persistent Systems is definitely one of our pick, right? So you can actually see that when it compares to the strong volumes, actually those are seen around 1800 levels. I understand there is a lot of difference between the current market price and the 1800 levels that it is showing up, but still that's where the huge volumes are located around when it compared to the calendar year 2020. And the recent better volumes are seen around 2600 and closing below 2800 might demand for a slight correction again. A strong insider buying has been observed at 3000 levels, and you can see that our proprietary combination of price action, deliveries, and the volumetrics actually has given us these levels as the beautiful support zones where you can look for further investments. And there is no bulk deals which are observed after 2019, and you can actually see a very strong one-sided movement when it is 262% of mad run kind of thing from 52-week low. Definitely I wouldn't recommend anyone to go and put the money right away into this stock without looking for a bargain price. But definitely, as far as company is concerned, yes, this company has a lot to do in coming future. When compared, even while you look at the 50 and 200 moving average as well, it's kind of 800 rupees of difference is there between 50 to 200 moving average, which is kind of 1/3 to 1/4 of the current market price. Again, it is kind of hugely moved stock, so you definitely have to wait for a better price. And considering the mutual fund participation, one of the wonderful performed mutual fund which is Parag Parikh Flexi Cap, that is having almost like 22 lakhs of shares into this company. And but apart from that, and apart from the number of members which have increased from 227 to 254, which is again a good sign. Apart from that, I don't see any other when compared to the complete picture, the broader picture, the institutional investors, the investments completely remains kind of a flattish. So I don't have nothing to talk about. There is no negative, or it's not even a great positive that I can show on mutual fund participation rate, except that number of members and the better players into this segment. As a whole, you definitely have to wait for a better price. And this stock can actually can run, it still has a better run to do.
Now, let us talk about auto industry. Auto sector is one of the fast-paced sectors in the country. Coupled with the latest government's regulations on promoting EV vehicles, the grass is green for auto segment. In auto sector, we can discuss about this company called SKF India Limited. SKF India Limited is involved in the business of manufacture of bearings. It's a leading supplier of products, solutions, and services within rolling bearings and seals. It is also involved in manufacturing lubrication systems. It is formally known as SKF Bearings. Let us look at some of the key data points of this company. The market capitalization is at 15,788 crores. Current stock price is at 3,192 rupees. Stock P is at 41.9 versus sector P of 65.49. Book value is 316 rupees. Dividend yield is at 0.45%. ROCE is at 22.6% and ROE is at 17.1%. Face value is at 10 rupees per share. If you look at 3 year CAGR growth of this company, revenue has dropped by 1%. Net profit is flat. Operating profit has also dropped by 1%. Let us look at some of the shareholding patterns in this company. Promoters hold around 53% of total shares. FIIs around 5%, DIIs hold around 28%. Remaining 14% is held by public. Let's look at some of the pros of this company. As I've already mentioned, this company is formerly known as SKF Bearings, but it has widened the product range and now it is being called as SKF India. It has its customers into different segments and industries. So the sales of this company are not dependent on any single sector. It has products in industries like aerospace, constructions, food and beverages, general machinery, marine, ocean energy, oil and gas, railways, 2 and 3 wheelers, trucks and auto. This was not impacted by the auto sector fall in 2018. As the PE is lower, the stock is cheaper than the industry. ROE and ROC of this company are on a growing trend. Sales are also in the rising trend. SKF is a proxy for many sectors like infra, auto and energy as well. Public shareholding of this company is around 14% and the current ratio of this company is very high. If we have to look at some of the cons of this company, the price to book ratio is relatively higher than the industry. There has been a decrease in the total DII shareholdings in the Q2 of 2021. They have fallen from 29 to 28%. Now, let us look at some of the technicals and data analysis of SKF India.
Your RG back again to talk on the technical aspects of SKF India, and here I don't want to consider this completely into auto because as Shiva has already mentioned, SKF India is not just more, it's no more just into auto space, it's kind of supporting multiple industries, be it marine, be it food and beverages companies, where actually it's kind of an industrial support, it provides the infrastructure support for the industries. So I don't want to consider it under auto. I don't want to put the chart of auto sector and show it to you against the Nifty 50. So let's go directly into the technical analysis part of SKF India. When compared to from calendar year 2020, I can see large volumes are actually around 2,400 levels. By the way, it's a strong disclaimer that actually I have good holdings into this company. It's a full disclosure, but still, and if I get the prices, these prices, these demand zone prices, which is kind of 2,200 and 1,900 prices back again, I don't mind to enter even more at these prices. So these are beautiful demand zones that you can actually look for, and it is a candidate of which is ready for the parabolic breakout. Parabolic breakout is one of the strongest breakouts that I have seen in my experience with the stock markets. And it hasn't yet given the parabolic breakout yet, but if it gives, it would be one of the candidate which is ready for giving it. And 52-week low and high, as mentioned, again, this is kind of a single-sided movement. But at the same time, you can't really compare with the 52-week low because we had a pandemic in between, and 52-week lows. There are very strong 52-week lows recorded at that time. So probably you may have to compare it with the 52-week high before pandemic's situation. So that's when you'll be able to understand the exact valuation of these companies. And moving average also kind of depicts a similar kind of message where there is a difference of almost like 500 rupees, which is one third, a kind of 1/6 of the current market price, which is again, I can't really say that it's a better price to enter, but definitely if you can get these prices, what we have mentioned, you definitely can look for that. And when compared to the mutual fund holdings, I don't see any serious negative or serious positive in this stock as well. Of course, just a 1.5 percentage drop in this total institutional investors, which the volumes are currently consumed by the retailers though. But still, the number of players have actually increased in the mutual fund holding part. Players in this SKF India have actually increased from 116 to 134, which is still a positive. So positive and negative, just I can't really I still have a flattish perspective when I take it on the mutual fund holdings is concerned. But still, it has a wonderful HDFC Midcap is having almost like 43 lakhs of shares of SKF India, and Mirae Assets is having almost like 27 lakhs of shares, which accounts to almost 5.5%. SBI Blue Chip is having 20 lakhs, and Kotak Emerging Equity is currently having 13 lakhs by the end of June quarter 2021. And the promoter holdings currently it's completely unchanged, and 50 plus it's a decent promoter holdings. Something beyond 60% I would consider it as definitely great, and beyond 70 is amazing. Beyond 50, it's a decent holdings that you can consider it as. As a whole, here as well, you actually can as far as company is concerned, it's a wonderful company to look at, but for the current price range, you may have to wait a little for it to consolidate. Thank you.
Now, let us discuss about plastic products. Plastic production has begun in the year 1957 in India. As of now, we have close to 30,000 manufacturing plants in the country that are producing plastic. They are employing around 4 million people. Currently, India is the third largest plastic producing country on the globe. In the plastic production segment, we can discuss about this company called Prince Pipes. Prince Pipes manufactures CPVC and UPVC pipes and fittings for industrial and domestic applications. It offers piping systems and fittings in the segments such as plumbing, sewerage, agriculture, and borewell. Some of the key data points of Prince Pipes are as follows. The market capitalization is around 7,372 crores. Current price is 670 rupees. Stock PE is at 32.3 versus sector PE of 44.4. Book value is 94.8. Dividend yield is 0.52%. ROCE is at 28.8%. ROE is at 23.8%. Face value is 10 rupees per share. Now let's look at the 3-year CAGR growth for this company. Revenue has grown at an average of 17%. Net profit by 45% and operating profit by 31%. Let us look at some shareholding pattern in this company. Promoters are holding almost 63% of the total shares, followed by FIIs holding 3% and DIIs 12.5%. Remaining 21.2% shares are held by the public. Now, we can discuss about some of the pros of this company. Prince Pipes is almost debt-free. The 5-year CAGR growth is around 49.49. Stock PE is at 31.1 versus an industry PE of 43.15. Prince Pipes is a proxy for the sectors such as infra, housing and agriculture. Debt equity has reduced considerably from 1.22 in 2017 to 0.08 in 2021. There are some cons for this company as well. The financials of this company, they don't support the price at which the company is being traded. Trailing 12-month PE ratio is above the industry median, but still it is less than the industry leader, which is Astral Pipes. Price to book ratio is 6.74. It is very high in the industry. Of course, it is less than the industry leader, Astral, which is trading around 27.22. Beta is 0.88. Now, let us talk about some technicals in data analysis for Prince Pipes.
Hi, Aji again to talk about the technical and the data analysis part on the Prince Pipes. So this is one of my favorite sector when it compared to the plastic products and plastic pipes, basically, because it's kind of a proxy that, as Shiva has already mentioned, it's kind of a proxy for it could be infra, it could be the housing industry, or it could be even for agriculture industry. So it's a proxy, and I love to have the proxy companies because it doesn't depend on a single sector performance. So going into the technical part, the last good volumes are seen around 440 to 450 levels. I understand it's still again a little away from the current market price, but still that's where the good volumes are sitting at. And there are great demand zones currently located at almost like 525 area and 440 and 315 levels. I really, for the sake of investors, I strongly feel that this stock should not fall to the areas of 350 levels. But in case if it falls, I'd be the first person to jump in and pick up a few stocks into this company. So when compared to the 52-week high and 52-week low, we have given the numbers, and you can see that this is completely a single-sided movement in the stock, and you definitely have to wait for a better price to get into it again. And when compared to the moving average price as well, it's 182 rupees of difference between 250 to 50 moving average price, which is kind of one third to 1/4 of the current market price. Again, I strongly feel the stock might demand for a correction, and you can actually grab a few stocks when in trenches at these prices. So when compared to the mutual fund holdings as well, it is not a company which is having great mutual fund holdings, and there is a slight fall actually in the total institutional investors, where it has fallen from 18% to 15.5%. But at the end, actually, it still had a great number of members increase in this stock. So which is kind of, it is not currently sitting into the hands of few members. It is currently kind of diluted, and it has gone into the multiple hands, strong hands basically. And Oman India, it is currently having almost like 42 lakhs of shares into this company. Mirai Assets is having 29 lakhs, where the Kuwait Authority is having 17 lakhs of shares in this company. And there's decent holdings of IIT Birla and UTI as well in this company. The one beautiful thing that I can talk about is about the promoter holdings, that it is currently having 63%. And again, it is not changed at all since few quarters, and that's actually 60%. Anything above 60% is definitely impressive promoter holdings. So mutual funds, number of mutual fund participants also have increased from 9 to 11. That's again a positive. So as a whole, again, when it compared to the mutual fund perspective, it's kind of flattish again. I'm happy with number of members, but I'm not happy with the decrease in the total institutional investors. But again, at the end, it remains flat for me when it compared to the mutual fund holdings perspective. As a whole, the view of Prince Pipes as well, you may have to wait for better prices, and you can actually accumulate at the prices what we have mentioned.
Now, let us discuss about packaging industry. The size of Indian packaging industry is around $55 billion. It is expected to reach $205 billion by 2025, thanks to the surge of e-commerce segment. According to a study done by Indian Institute of Packaging, the packaging consumption per person per annum used to be 4.3 kgs in 2010, which has reached almost 8.6 kg in 2021. In packaging segment, we can talk about this company called Polyplex. Polyplex is engaged in the manufacture of plastic films. Globally, it is one of the lowest cost manufacturers driven by economies of scale, operational excellence, vertical integration, and strategic manufacturing locations. Some of the key data points of this company are: market capitalization stands at 4,837 crores. Current price is at 1541 rupees. Stock PE is at 10.9 versus industry PE of 10.15. Book value is 973 rupees per share. Dividend yield is at 11%. ROCE is 26.8% and ROE is at 16.8%. Face value is rupees 10 per share. If you look at 3-year CAGR growth, revenue has grown by 11.2%. Net profit has grown by 47.5%. Operating profit has grown by 35%. If you look at the shareholding pattern in this company, the promoters are holding almost 51% of the total shares, followed by FIIs holding 7.7% and DIIs holding 4.7%. Public shareholding is at 36.5% in this company. Some of the pros of Polyplex are: this company has reduced its debt. Stock is providing a good dividend yield of almost 11%. The company has delivered a good profit growth of almost 7.51% CAGR over the last 5 years. It's maintaining a healthy dividend payout of 56.84%. Polyplex is proxy for the sectors such as packaging and housing companies. Debt equity ratio has reduced from 1.22 in 2017 to 0.08 in 2021. Some cons of this company are: it has delivered a very poor sales growth of almost 8.96 over past 5 years. The company has a low return of equity, around 12.7% for the last 3 years. The net profit is declining, and so is the profit margin. Recent results suggest that the declining operating profit margin and net profits. Now, let us look at some of the technicals and data analysis of Polyplex.
Your RG is back again to talk about technical details on Polyplex. So, by the way, have you noticed that any company which is having poly in their name actually has ran like anything? It had a mad run from the pandemic levels, especially because of the intuition that the people had that India would lead the industrial sector. So if the industrial sector is growing, definitely the packing sector has to grow. And Polyplex is something which is having a wonderful exposure, wonderful market share on the in the packaging industry, especially its low cost production is the positive for it. And it is not just into this, it is also into the roofing segment as well, which means it is kind of a proxy for both infra, industrial, and also the housing industry. So Polyplex is something which you have to look at. Now, coming to the technical aspects, the last good volumes are actually are seen around 1350 to 1360. That's where the last good volumes are seen around. And but if I have to say the wonderful volumes, they are actually it's somewhere at 700 levels. Like any other company which has really shot up really fast, they are having strong volumes at almost like 1/3 of their current market price. But you have to be wise in identifying which price would be the better price to get into it, and you have to identify where the big boys are sitting and to get into it. So when compared to our proprietary demand zones, actually that we have identified are around kind of 1150, 940 levels and 770 levels. And I really don't mind to jump in and pick up that because my holdings are somewhere at 600 to 700 levels is what I was holding this from. Again, the full disclosure, we are holding it from almost like 600 levels, and 775 or 950, if I really can get this price, I don't mind to jump in and pick few more into my portfolio. And 52-week high and 52-week low, you can actually see 330% from its 52-week low. This tells you maybe you definitely have to wait, but actually
this has a reason, not just these, any company which is into this packaging segment, it has really had a wonderful run. So it is actually having backed up with a strong fundamental reasons why these stocks have to actually move. So I can't actually guarantee you on the steep corrections, but still, as an investor, you definitely have to have the stocks in a better bargain price. So even compared to the moving average prices as well, so there is almost like 400 rupees of difference between 50 and a 20-day moving average price, which is 1/3 to 1/4 of the current market price. Not a right price to enter maybe at this price when it is at falling in this rule. So these prices, I think you can get it in your future as well. So so you have to wait for better prices in this. But as far as company is concerned, this is an amazing company which you can actually look at. And when it compared to the mutual fund holdings as well, it is not having great mutual fund holdings into it. It's just 8% again, kind of not a great percentage that you can look for. But again, like any other company, it is also having an increase in the number of players in the total FPIs, but there is no change in MF holdings, not even in the percentage as well. It's kind of flattish view again when we look at the mutual fund analysis. So this stock actually has given, in the last 10 years, it has moved almost like 23% CAGR. And in the last 5 years, it has given 39% CAGR. And last 3 years, it has given a whooping up 44% CAGR. Let us not consider the last 1 year because it had an abnormal year. So that's what the stock performance is.
Now, let us talk about infra and construction sector. Infra sector has been the biggest focus area for the government of India. Our Indian government has planned to spend around $1.4 trillion on infrastructure development from the years 2019 to 23. In Infra Midcap Space, we can talk about this company called KNR Constructions. This company is engaged in the business of infra sector, primarily in the construction of roads, bridges, flyovers, and irrigation projects. Some of the key data of this company are: the market capitalization stands at 9,064 crores. Current price is at 322 rupees per share. Stock PE is at 19 versus industry PE of 34. Book value is 70 rupees per share. Dividend yield 0.08%. ROCE is 22.2%. ROE is at 23.2%. Face value is 2 rupees per share. If we look at the 3-year CAGR growth, then revenue has grown by 11.6%. Net profit has grown by 18.7%. Operating profit has grown by 16%. If we look at the shareholding pattern in this company, promoters are holding almost 53.25% of shares. FIIs 2.29%. DIIs hold 34.35%. Public shareholding is around 10.1% in this company. Some of the pros of KNR Construction are: this company has delivered very good profit growth of 29.44% CAGR over the last 5 years. The stock has grown with almost 10-year CAGR of 39%. Let us look at some of the cons of KNR Construction. The growth of this company is not backed up by the financials yet, but we expect that the infra sector can grow very well in India. The beta is very high at 0.84. Now, let us look at technicals and data analysis of KNR Construction.
RG back again to talk about the technical details of KNR Constructions. We thought that when we analyzed this company, it was around some 250 to 260. That was the price range of this stock, and we thought that this would be a great purchase at that levels. But by the time we made this video, unfortunately, fortunately, I don't know. So it has actually moved. The stock has already moved till 340 to 300 plus levels. Yeah, but still, this company is a wonderful company to look at, and this is into infra. And anything, in India, if something has to get better now, the first thing that has to improve is the infra. So I see that KNR Construction is the only company in the mid-cap space which has better in this sector available at a better pricing. So definitely you can actually have a look at it. And when compared to the last good volumes, you see that 260 to 240 levels are actually a wonderful volumes that you can look at, wonderful prices that you can look at better volumes. And also these are the areas that are having better demand zones. Obviously it had a very strong run when it compared to the last 52-week low. Again, obviously 200% away almost like from 52-week low, then you have to wait for a better price. And moving average also depict the same thing. It's a kind of 60 rupees of difference between 50 moving average and the 200 moving average, which is kind of 1/6 of the current market price. Maybe when it falls to 1/8 to 1/9, 1/10 of that, the difference, then maybe you can start looking at this slowly. And even when it compared to the mutual fund holdings of this company as well, you can see a very strong holding. So you can see 179 lakhs of shares are currently with HDFC, 178 lakhs are with DSP, equity and bond, and it's like you can see the percentages that they are currently holding in this company. And also the institutional investors actually totally have increased from 34 to 36%, kind of 2% increase in this. But again, we can't see this as a positive as well, because there is a slight reduction in the promoter holdings as well, kind of 2%, 1.75% of fall in the promoter holdings as well. But here, if you see the institutional players kind of increased 2.25%, which says almost like the institutions have actually consumed the promoters' share. And whatever the shares which are left by promoters have been consumed by institutional investors. And not just those, of course, they have consumed a few shares of retailers as well, which is again a very positive move in the total institutional investors. So whenever you see the holding capacity, don't just see the promoter holdings. You should also see in comparison with the total promoter holdings plus FIAs and plus DIAs. That's when you will have a better perspective. So when it compared to the mutual fund, also they have increased from 30 to 32%, and even the number of players in this holdings as well have increased from 74 to 90%, which is kind of again a positive thing in this company when it compared to the when it compared to the previous quarters. In the June 2021 quarter, it is having a better perspective from the MF holding concern, right? So and this and when compared to the CAGR, actually the stock has given a wonderful CAGR of 39% in the last 10 years, 33% in the last 5 years, and 36% in the last 3 years. This is a wonderful movement when it compared to the CAGR is concerned. And as far as stock is concerned, as I said, this is the only stock which is available in the mid-cap space when it compared to the when we talk about the infra and the construction space. Yeah, thank you.
Thank you for watching this video till now. And these are our 6 sectors that we want to cover in the part 1 of the sectorial bets in the mid-cap space. We would come up with the part 2 very soon. Please subscribe to our channel. Also, please do share and like this video. In case if you don't like this, do not mind to hit the dislike button, but please leave a constructive feedback in our comment section so that we can improve. Also, in case if you want to have a deeper dive into any of these stocks, please do let us know the name of the stock in the comment section so that we will come up with a elaborative information on the company.